I mean, first of all, there is a fundamental shift from a number of countries within Asia in terms of deploying capital to markets other than Asia. And that's a structural shift, and I think Richard was touching on this before. We have a number of investors that we've never seen in European real estate before. And it's not just Europe, it also applies to the US as well, fundamentally. That's a fundamental shift that is going to, in my view, explain the likelihood that for the next couple of years there is a dominant feature of the key cities in Europe where Asian capital will be significant. I think the US model is sufficiently well established that it's unlikely that there will be a significant change there in the short term, by which I mean that US LPs have for many, many years accessed European real estate in the majority through fund structures and often opportunistic value add or distressed vehicles rather than going the direct route, with some exceptions of course. There is a little bit of change going on there, and there's been some of that highlighted in the press without wanting to name anyone, but CalSTRS have come out and talked about getting direct exposure in a non-domestic way because they are overexposed to non-core assets. Is that a trend that may lead to more? I'm not sure. They have a specific allocation issue, but they are a very, very substantial investor as well. So I think that in terms of direct deals, Asia will certainly be a very dominant feature, as will the Middle East. And I think that the US will continue to deploy significantly into Europe, particularly into the opportunity set and through funds. Australia is probably slightly different. Again, the Australian investor market went heavily into opportunistic funds in the upturn last cycle and got fairly badly burnt during that process. And what we're seeing at the moment is that the vast majority of the large superannuation funds in Australia are looking more for a core exposure, or core with a sort of value angle. So is it a particular sector in a country? Is it Spain? But fundamentally buying core assets. But they will take, again, most of the larger superannuation funds are going to revert to initially a direct route, so perhaps separate accounts, and obviously we've seen a couple of examples of that. And then 15 seconds or more on Japan. Japan is an interesting one, I think, because they were very significant investors into the European market, in particular London, and then obviously that then reduced significantly. There's been some activity, but not a huge amount, and we are starting to see a little bit more inquiry from Japanese investors. Some of it's fund, some of it's looking at potentially separate account. My expectation for that, though, is it'll take a little bit of time for that to properly flow through. It's really the short-term story is going to be about the Chinese investors, the Koreans, Malaysians. We talked about Singaporeans. We actually had a Thai investor come into one of our funds a year or so ago. I think it's the first time I've come across that myself, but it's really starting to open out. I think that's where there's going to be a lot more flow.